Good day, ladies and gentlemen. Welcome to the show on this Tuesday, the 23rd of August, 2022. Thank you for tuning in. I'm glad to have you guys here. Gonna tell you what, can a man actually predict a market, the downfall in the markets ahead of time to almost the day? Normally I'd say no, and if anybody ever tried to do that, they must have a little bit of a screw loose, you know? But I'm going to tell you guys what. I see this Friday, about only 72 hours away, as being very problematic, to say the least. We got a Jackson Hole meeting coming up. And I think the meeting commences, I think it's 10 a.m. on Friday. The markets right now are out of sync with what the Fed's doing. They haven't really priced this thing in to the extent that I think all along they've been kind of in disbelief. Well, the Fed would never do that. The Fed can't do that. They can't possibly do that. And I've been thinking the same thing, but the Fed is, we all know that they are there and they're getting ready to push this thing. It's like a car that's on the edge of a cliff and said, no, they won't. There's kids inside that car, for crying out loud. What's he doing? He's going over, he's going to push that car off the cliff? No, they ain't going to do that. Yeah, they're getting ready to step over and push the car off the cliff. Now, how are they going to stop it on the other side? I don't know, Are they going to come in with $20 trillion maybe to stop this if it starts to roll over the edge? But here's the go time. It's go time this Friday. It's go time, and then Monday morning, I'm expecting that if things don't go properly here, we could see a major cataclysmic fall in almost the price of everything. I mean, we're look at what we got going on in China right now. The economic data coming in from China is absolutely dismal, and they got huge problems going on in China. Europe is not no any better. Europe has got huge problems. They're at the whim of the Russians turning off the pipeline anytime they want. And what are they going to do this winter? Energy crisis all across Europe. We got the Yangtze River in China, for crying out loud. It's drying up. I can't believe that. The Yellow River, what they call, I guess that's the Yellow River. One of the massive tributaries. Then they're desperate. They say they're going to fly in the sky and they're going to do cloud control, and they're going to make the clouds rain using weather control methods. The Chinese, and I mean, for anybody out there who says, "Oh, they can't control the weather," well, you're wrong. They can. And China's said that we're going to control the weather. We're going to make it rain. But it costs a lot of money to do stuff like that. We got threats of war going on. But here's also the thing about war. Is war costs a lot of money. Can you afford it? Basically, that's what it boils down to. Does your central bank have enough gold stored away? And that's basically what it boils down to afford to go to war. Perhaps the only good thing about bankrupt countries is maybe they can't afford it. Anyway, I'm kind of just, what do you call it, rambling on here a little bit. We got stuff to talk about. We've got a coordinated collapse of the system that, in my estimation, can't be anything else but a planned systemic failure of the system and it's all coordinated. I mean, we've had a credit binge for the last 40 years, and if you were to take a look at a coordinated charts of the population growth worldwide, it coordinates along with this credit binge that we've had, and it's just been unreal, the amount of credit they've taken out. And they got to continue to take this credit out or the system's going to crash. And right now they're threatening to not take the credit out, to actually pull the credit away. But where's that going to get them? It's going to get them into the system starting to crash, into the greatest depression ever. And then at a certain point, they're going to have to say, well, we can't continue with this. Otherwise, the people are at a certain point are going to react to this. Okay, they're not reacting right now. And to a casual observer who's sitting on the sidelines, he could say to himself, oh, they'll never react. But they're not reacting because it's not really striking home yet. It's kind of like a pie in the face, and they're shaking it off, and they're like laughing about it, but it's not really hitting us home yet. When it's a rock to the head, then they're going to wake up when their belly is empty. Then they're going to wake up in mass. And that's next. That's what's coming. So ladies and gentlemen, let's open up the charts right here and take a look at what's going on. We got zero hedge here. It says, is the Fed setting up a CBDC recession trap? Okay, let's just change the wording of that a little bit. A central bank digital currency depression trap. In other words, crisis and then offer a solution. So first they're going to offer you a crisis that they're going to create. The politicians, it says, have taken advantage of every economic disaster since the Great Depression. Well, that's what they're creating right now, is a Great Depression 2.0. In private backrooms meetings, they exclaim with delight, never let a crisis go to waste. This revolting phrase goes all the way back to just after World War II, and it's credited to Winston Churchill, who at the same time was working to form the United Nations. So maybe they are trying to corral us into a CBDC. Maybe that's what this is all about, create enough poverty out there on a massive scale and say, okay, here's a solution. We're going to offer you a CBDC and we're going to bail everyone out everybody's going to have a line of credit at the Fed, but it's also control. And at that point, maybe they think the people will accept it. I just don't know exactly what's going on. That's possibly it, but it might backfire on them. I'm going to tell you, if they get the people angry and hungry enough, they think, oh yeah, we got control and everything else. What they don't realize is just what a hungry mob is like. They've seen mobs during the beginning of the COVID crisis. We've seen mobs, and we've seen what their potential is, and these are only small mobs. These are only small mobs, and most of them were. I saw there's a lot of kids mixed in there, riding on bicycles and stuff. And stuff. I remember when it happened. I'm not saying they're all kids and stuff, but there are like a lot of just adolescents running around, and stuff. But they weren't I don't think they were really hungry. I'm talking about massively larger. Like, if that was a 1, I'm talking about a 99 coming. And, and hungry and angry like you never seen before. And don't underestimate the potential of when the general population starts to go hungry. Not just a few, not just a minority, but they're creating a situation that could start to impact. Right now, the general population out there hasn't really been impacted that way yet, and that's why they're quiet. But you create the right situation, and this might be what they're doing so that they can push through their CBDC and then issue in utter control over the entire system. Something's going on anyway. So, okay, it says, who's afraid of Jackson Hole? Speculation about the possibility of hawkish comments from Powell at Jackson Hole on Friday has been rampant. He is scheduled to discuss the economic outlook, but markets will be more interested in his outlook for the federal funds rate. I'm going to say the outlook's going to be hawkish to the extreme, and I'm going to say that it probably is going to roll the markets over to the downside. And it's probably going to be Friday. Markets, we're probably going to see them roll over to the downside. And then what's going to happen is that fear it generates in the markets is going to translate itself to Monday. And I think Monday, it could be a black Monday. It could be a very bad day indeed. Could be. I'm not saying it will be, guys. But like I told you, You really shouldn't try to predict markets this closely. But I mean, think about it. Just think about it. Take a look at the silver price today. We're seeing silver kind of just in the past few minutes, it's kind of screamed upwards a little bit, 21 cents at $19.20, which is still extremely undervalued for real physical silver, considering what's going on out there with inflation and stuff. Now, here's what actually could happen. We could see the disinflation continue, especially if the markets start to turn downwards in a big way. It could actually, the disinflation could actually try to extend toward deflation, depending on how bad the disinflation gets. At a certain point, though, they can't let this go, because this would just destroy the entire system. The entire system would freeze up, lock up, and we'd be in a Mad Max world if they just sat back and let this continue. So then they would lose power in such a situation as that, and possibly never regain power again. They have to maintain their power structure, their power base. So at a certain point, they're going to try to turn this thing around. It's going to require money, because that's the only tool they have. That's their hammer. And when your only tool is a hammer, everything looks like a nail. And so that's what they'll do. They'll print. Go back to printing, and it's going to take a massive amount of money to turn this thing around because of what they're creating. Take a look at gold. Can we say hyperinflation? Anyway, gold's up $13. Even still, at these tremendously low prices, even though we get a little bounce today in the price of gold and silver, they're still so undervalued. Considering how they might, what the Fed's doing right now, even though it's deflationary right now, you have to be an investor, you have to be farsighted. You just can't be short-sighted. You have to think out forward what's going to happen. And ultimately, when you think out and you look forward past this Fed shenanigans, I see nothing but massive inflation on the other side of what they're doing right now. So they cause this little bit of disinflation or deflation, even perhaps deflation. And then what do I see on the other side of that is them trying to repair it as best they can, however they can. Maybe central bank digital currency, or maybe not. But those repairs are going to be so inflationary that we're going to see then massive moves up in the price of these asset classes that we've been waiting on for years. And everybody's discouraged right now. And you got these low prices on gold and silver. Hang on to it. If you got some physical, hang on to it for dear life. Don't let go of it right now, just before everything's ready to go haywire in the system. Perhaps what you've been waiting for years, we might be getting closer and closer than you could possibly imagine to it. And when we see these massive moves up in the price of gold and silver and cryptos, do you know what else we're going to see? We're going to see a narrowing of the price in gold and silver. The exchange, how much silver you can get for an ounce of gold, is going to change. It's going to go closer to the 1-to-1 ratio. Ultimately, I see it going to overshooting what's normal. And what's normal is not what we have right now with the gold to silver ratio. What's normal is about 10-to-1. That would be perfectly normal, or 15-to-1. That would be normal. When it finally does, when we finally see gold and silver break free and go to their price of fair market value, we're going to see the closing of that gold to silver ratio, and it's going to overshoot. And I'm really expecting it possibly to go to a 4-to-1 ratio for a very short period of time before it settles back in, maybe at 15-to-1 or something like that, or 10-to-1. And you know what? When it does that, gold is certainly not going to be at $1,749 any longer. is going to be priced to fiat, I'm not even going to put a price on it when you price it to fiat. It's impossible to figure. If you've got the dollar losing value daily at a massive rate, how can you price gold to that? Because gold's going to be doing the opposite. It's going to be gaining daily. And it's impossible to even put a price tag on it at that point. Cryptocurrency today, 1030 in billions, so it's 1,030,000,000,000. And we're looking at a Bitcoin price of 21,638 and 1,647 for Ethereum. I'm going to tell you, I went through a number of these other coins yesterday. I went down on the list and I come across a few coins and I was like talking about them, saying, hey, you know, don't get too far away from Bitcoin. And what I was trying to do, I know maybe a couple other coins I talked about are like probably maybe right now nice coins and everything else, you know. Well, what I was trying to point out to you guys is very simple and very clear. Bitcoin has a cost associated with it. And that means it's got a floor underneath the price because it's got a mining cost associated with it that costs electricity. And I was just saying, don't get too far away from Bitcoin because a lot of these coins that are further down on the list, they don't have much cost associated with them, if any. And what does that mean? It means if there's no cost associated with something, it's like the US dollar, there's no cost associated with that. They can just type in how many units they want into the computer and hit print. Or they don't print anymore. They just automatic money creation. And basically your bank account's nothing more than a ledger where they just shift the numbers back and forth. So you spend $100, they just subtract 100 from whatever money you have, so-called money you have in the bank. And it's as real as the money your kids use in these video games. But Bitcoin does have a cost associated with one Bitcoin. It's not near as much as $21,000, and it's got a lot of room there, a lot of profit margin left there, whereas gold and silver don't. Looking at the Dow Jones today, we're seeing it's only up 34 points after a big drop yesterday. Okay, only up 34 points. It means that they're being cautious with this market, and they got good reason to be cautious. Because I think at that Federal Reserve meeting this on Friday, they're going to set in motion what could turn into a crash on Monday. You know, it just depends. But I mean, the market's been pretty much a Teflon market, but they've been picking away at it, you know. And it's almost like they're like a house when you're trying to demolish a house, you know, and you're picking away at pulling the supports away and everything else, and you got a chain on it connected to a tractor, and you're pulling or whatever, and the house is not fallen over yet. But they're going to continue working. The crew's going to continue demolishing, smashing walls and everything else, and putting chains on it and pulling on it until it finally collapses. That's the Fed. They're just going to. This is a controlled demolition of the financial economy, which is going to lead to a controlled demolition of the general economy out there. The economy you live in is probably going to lose your job. You're probably going to be struggling to make bills, pay bills and stuff. And at a certain point, people are just going to say, hey, you know what? We can't put food on the table and I'm hungry. And their neighbor are going to go out in the street, and their neighbor's going to be out there with them, and he's going to say, hey, you know, same thing with us. And then the people next door and the people all down the street are just going to be standing there saying, hey, we're hungry. What are you going to do about it? And that is the fuel. All it then takes is a spark at that point. That's the barn full of hay, and all it takes is a spark. That's what we got coming. Crude oil today, 93.40, and it's up $3.04 on the day so far. Well, all of this is just bound to occur anyway, because they're running out of oil, and this is an oil-based economy. They are going to run out of oil. Oil does not manufacture itself underneath the ground. There was reserves of oil there. Just like there's reserves of gold and silver and reserves of other things. I mean, when you find something, you don't expect to find an unlimited supply and have it growing in the, like trees are a renewable resource. They do grow back. If you cut trees down, they grow back. We see that. But other things like minerals and things like that, they don't grow back. I'm sorry, but when they're gone, they're gone. So, like if you come across a coal deposit in the ground, you dig it all out and there's none left. There's none left. The coal doesn't grow like trees. I mean, these deposits that are in the ground, the oil deposits are the same way. You suck it all out of the ground, and there's no oil left down there. Yeah, you can go back and set up a thing with shale oil, and you can actually squeeze a little bit more by using high pressure steam and stuff to get it off the rocks that are down underneath the ground and get that last little bit of. It's like when a kid is sucking the last little bit of a strawberry milkshake out of and he's going around with the straw and sucking that last little bit out. But in the end, there's going to be nothing there. That's what they're doing to the oil reserves around the world right now. And very soon, it's going to cost more to get a barrel of oil than the oil you got to get it with. I mean, there's cost associated with it, and in the end, it ain't going to be worth it. And, it's going to be higher and higher priced oil. And that's going to have an effect, And perhaps they know more than what they're saying. Perhaps an awful lot of their initiatives are centered around the fact that they're running out of oil. And they know that this is going to send the world into a tailspin at a certain point. Move index today, 135. It's going up today, and this is reflecting on the credit markets. We're going to have to keep our eye on this very carefully right now because it's starting to move up toward a little bit higher, and it'll be up toward its moving average that I plot. I kind of plotted along here over the period of the last year. I just basically draw a line between this low point here and where it should. It's down a little bit, but probably by the time it gets up around 175, it would be passing what I consider to be its moving average. Bonds and rates here. Looking at falling yields, but not much. Looking at a U.S. 10-year at 3.01 and a U.S. 30-year at 3.23, I wouldn't be a bit surprised if not today or tomorrow if we see these yields start to climb again. And this is putting pressure on the markets. Dollar index today, we're seeing at 108.38 on the U.S. dollar index. And you see where it was going down, 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 right? Well, the change in direction right here that occurred in the dollar in the last maybe hour or so corresponded identically to this change in bond yields. The bond yields started to rise again from the low. They fell, and that's when the dollar went up. Take a look here. Up, the dollar fell, and then the dollar starts to go up when the bond yields start to rise. I mean, it's just they're correlated perfectly. Right now, anyway. For the moment, they're correlated. There's a correlationship there between them. I can see it very clearly. There's also right now at this moment, there's a correlationship between the stock market and these bond yields. I can see that very clearly. So if these yields these numbers start to turn from red to green, and the U.S. 10-year starts to climb up higher toward 3.25, and I consider that to be a magic marker of that bond yield of the 10-year at 3.25 for the markets. It's been that way for quite a while now. Markets go into decline when those U.S. 10-year gets too high. Okay, thank you guys for listening to my show. Like and subscribe, and we'll catch you guys in the very next episode. You guys have a great afternoon. Bye-bye.